Stock market rally this time defied gravity. Bears are waiting for something to cause the stock market to fall after its rally defied gravity. There will come a time when they will have to give in and buy stocks. Between its 52-week low and high, the S&P BSE SENSEX is up about 24%, and on the other hand, Nifty 50 is up about 19.19% from its 52-week low to its 52-week high. Although a little rally might have been reasonable from there, the extent of the rally surprised many. A major reason for the gain has been the hope that the central banks such as the Reserve Bank of India in India and Federal Reserve in the United States will end interest rate hike soon. It is believed that the economy and corporate profits will stabilize once rates stabilize. There is, however, a short-term risk to earnings as interest rate increases take time to impact earnings. At the same time, the market is now extremely expensive with the S&P BSE SENSEX trading at just over 25.70 times and Nifty at over 23.8 forward earnings per share estimates, which is extraordinarily high considering how high interest rates are. The markets could have pulled back for a number of reasons, including the rise in treasury yields in July 2023. A second example of something that typically puts the market under pressure is the expectation that the Fed will raise rates in the federal funds futures market, and given India's inflationary trend, it is likely that RBI will raise interest rates one or two more times before it is done. It's possible that lackluster corporate outlooks during second quarter earnings season will drag on the market in the future. Despite such headwinds, stocks have risen broadly. Market participants seem to be focused on the inevitable dip in interest rates and boost it will provide to profits. So, those who are bearish on the market will be forced to capitulate and abandon their pessimistic views and buy stocks as the S&P BSE Sensex gains 10,000 points. Every core strategist predict that the bulls will become more bullish after that point. Currently, the index is above 12,798 points from its 52-week low. There has been a similar gain in the past. The Sensex rose about 81% from its low point during the financial crisis of 2008 and 9, only to fall back around that level as it priced in the recession that was to follow. In the near term, bears will likely assume the market has moved beyond recession fears if the index remains stable and shows little signs of cracking. Ultimately, if bears cannot beat the market, perhaps they will join it. Let's see how the trend is unfolding in the coming days. Thank you very much for your patient hearing.